Hi guys, thanks for tuning in to another episode of Nuggets News. Well, we're back with Kyle and we're going to be talking all about what's going on at the moment with this death spiral for the banking system, the bond market, Bitcoin's printing new all-time highs. How have you been, mate?
Yeah, pretty good. I mean, can't complain with the new all-time high, that's for sure. But
Exactly. Well, first, before we have a look at a couple of these charts, I think for people at home, I want to try and explain these complicated inner workings of the system in an easy to understand manner. Because it's the Japanese bond market in particular where interest rates have spiked after Japan had their issues in the 90s. And ever since then, they've basically been printing money. They've kept interest rates at zero or negative. And there's this phenomenon called the carry trade where all these big investors were going in and borrowing money because you could borrow it for free and then investing elsewhere in other assets. And we've been living through this boom from the 90s, through to now. Basically, everywhere around the world, you could get higher yields or invest in assets that were steadily going up. So this trade became more and more popular. It got up to, I think, $4 trillion. And just recently, that's started to unwind. And so everyone, it works for 30 years until it doesn't. And then everyone wants to rush for their exits. And that's caused a lot of chaos. And so what's happening now is that investors are going, well, where else am I going to put my money? And traditionally, the US dollar has been the safest dirty shirt in the laundry kind of thing. But now people are starting to say, well, look, they've got 36 trillion. Interest rates there are also high. Like, they're never going to be able to pay this back, but no other country probably is either. So where am I going to put my money? And I'll just show this chart quickly. This is from the FDIC website in the US, and the US banks have been sitting on the hundreds of billions of dollars in losses. And so when you think about it, it's not just the banks, it's the pensions funds and that need to pay out pension funds that are now sitting on huge losses. And so this is just what we've been warning about for years, and why I've been telling people to buy Bitcoin for years and gold and other things, because more and more people are just waking up to the fact that this is now out of control. It's a death spiral where the only way to rescue this is to print more money and do QE. Bail out the banks. Do you bail out the pension funds, or where do you even park your money? And if you do print all that, and that's going to drive more inflation, and that drives up interest rates higher, and then bonds go down further. And so it's pretty clear now that we're very close to this kind of death spiral.
mm,
So, I mean, any thoughts on that before we do look at the charts?
I mean, the banks are kind of having the same problem that what they had in 2023. I don't know if you remember Michael Burry would come out and he was telling everybody to sell just as the market went straight up for about 2.5 years. And he's done the same thing again. He posted that he's selling, liquidating his entire portfolio, because of similar issues happening again, right? But I don't know, maybe he's right this time. I think he's going to be wrong again because the Fed is just going to come out and save it again like they did in 2023. But as we were talking about, that just equals more quantitative easing because they said they're going to backstop. Or the reason why the banks are all massively underwater is because they bought super cheap bonds, right, from the Fed, which is what the Fed encouraged them to do. And then, now they're massively underwater because now you can get higher yielding bonds, right? And
Yeah.
the difference is the gap. So, basically, the Fed's going to have to come out and fill that gap and give it to them at the price that they bought them at, basically, and make all the bonds back to basically $1,000 per bond. So, it's going to be really interesting to see how that ends up playing out. But the end result is gold, Bitcoin, property, like you were saying, is all going to go up.
Yeah, and so you've got, I think it was Jamie Dimon coming out, and more of these BlackRocks, and everyone's now is allowing their highest net worth customers to buy Bitcoin. And this ties into politics about the tension between Trump and the Fed not doing what they want. Is this, we spoke about, does Trump actually want a controlled demolition of the old financial system to usher in this CBDC? And there's so much talk about stable coins at the moment, and even is Ripple XRP, are they going to acquire USDC Circle, or are we just going to have a central bank digital currency like they're pushing for hard in Europe this year? So is this all kind of like just the playbook to usher in this new control system and digital ID and all that? But as you say, what people are now looking at is, well, if everything's inflating and there's trillions of dollars out there, like, I'm going to rush for anything that's more finite than that. And that's why gold's been on a tear, Bitcoin's been on a tear. But even relatively speaking, like property, even stocks, like they're not going to just print more stocks. So even like the valuations of stocks going out the window. So we might be entering this hyperinflationary stage that's going to absolutely kill and wipe out the middle class and the lower class that don't own assets because the cost of living and this inflation, blah, blah, blah. So this really feels like this is the precipice of what people have been warning about for a very, very long time. And I don't see how they get out of this. I've kind of used all their tools now.
Yeah, it's going to be interesting to see how it all unfolds, that's for sure. And well, I mean, you just got to basically buy Bitcoin and you have some sort of protection against it for sure. But it's going to be really interesting to see what happens over the next, 5-10 years. That's for sure. Maybe even quicker than that as well.
Yeah, I think it's going to be quicker than that. But do you want to bring up some of those charts and we'll just show people what we're talking about with that, the Japanese bond yield and even the US, like the 30-year, the biggest market in the world, US bond market, like it's insane. And they're meant to refinance all this debt this year. I think it's a few $1 trillion or whatever at 5%. Like it's so out of control now. It's never going to get paid back.
So as you can see, it's pretty much going straight up at the moment. This is a weekly chart, so every line is a week. But yeah, as what we've been talking about earlier, like this was obviously in a massive downtrend and got all the way down to, what was it? This was almost very close to being at zero for a while here. Well, it was pretty much at zero, but 0.01, etc. Blah, blah, blah. So yeah, obviously since COVID kicked in, it was really around like December 2021, which is kind of when the US started increasing its interest rates because they started having a problem with inflation. And obviously the same thing started happening in Japan. They started having issues with inflation getting out of control, and they've had any inflation for so long. So it's actually a good thing that they're finally getting inflation, but that means that we have to unwind this carry trade that's been going on. And US started increasing their rates, and we moved into quantitative tightening because of inflation being out of control. And Japan's having to do the same thing, but they're not doing quantitative tightening, but they are increasing the rates. But as we can see here, that the Japanese bonds, 30 years, just like absolutely moonshotting, because we've gone pretty much from 2022, 0.67 all the way up to basically 3.19. And it's getting steeper and steeper all the time. So that looks like what Bitcoin does in a parabolic move back in 2017.
Yeah, and I want people at home to appreciate what this chart means. It means if you had a mortgage or a car loan or credit card loan or anything, like the repayments are going parabolic, and like this strains the economy, like we're talking about before, and just wipes out everyone apart from the ultra rich that own all the assets.
So what's their plan from here? They're going to have to obviously get this under control again. So what do? Go back to yield curve control, start printing more yen and bring this down?
Well, this is the scary thing for the rest of the world, is that's what they've been trying to do since the 90s. And so if the Fed and the Aussie Central Bank, or if others go, oh, maybe we should do that, Japan has now proven that it doesn't work and actually, ends up worse. And so we don't know what the solution is at the moment. And are they just going to hyperinflate everything away into, Bitcoin, gold, stable coins, particularly now that the US has got all their gold back, do they want gold to go to 10,000 to help erase their debt? Like, Bitcoin strategic reserve, is this kind of all the plan that they're going to deliberately crash the system? That's the question I'm kind of asking and starting to think about. Yeah.
Crash the fiat system while loading up on gold and Bitcoin, and then all of a sudden you have massive amounts of assets versus, in dollar terms, you've got huge reserves of core assets that aren't inflating versus fiat currency, which is being absolutely inflated away. And now pay off your debt.
And you can turn around, you can blame the banks, you can blame the Fed, and you can usher in and say we need a centrally controlled digital currency, the central bank that they've been trying to usher in, like a centralized system of control that's all digital, and you do away with the old banking system. All part of this Agenda 2030 New World Order stuff we've been talking about.
Concerning, mate. So looking at the dollar versus yen, it's actually doesn't look too bad, to be honest. Obviously it looks like a massive head and shoulders pattern, but this is inverse. So dollar is first. If we go back and show the way most charts present versus the US dollar. You have to do JPY USD, and this is people always get confused when you look at
Yeah.
the yen chart. So like if you're looking at the actual strength of the yen versus the dollar, this is the chart that you want to be looking at. So Japanese yen, US dollar, but everyone prices it the other way. Just I think because it's so hard to quote, like 0.006974. It's like trying to quote like something versus Bitcoin in Satoshis, right? It gets confusing. So people put it the other way. So they can be like, oh, it's 174 or something like that.
Yeah. The reason that this chart doesn't matter too much and it's kind of chopping around is because it's not so much about the currency's value relative to each other now. It's the fact that if you look at like that US 30 year, it's all of these global reserve currencies are spiking in their interest rates. So they're all in trouble compared to the amount of debt they have and the position that the financial institutions are in. Rather than one currency itself collapsing, it's kind of like all currencies collapsing at once is represented in those bond yields spiking.
100%. Yeah, that's what I was going to run into that and actually bring up the DXY because it's a good point. So the Japanese yen obviously sort of going sideways versus DXY, but at the same time, the DXY is also like having a massive sell-off. Like there's a huge dump off, right? So obviously DXY is indexed against gold as well. I think it's important. So it's a basket of currencies plus gold. Obviously, the euro and gold are the two main ones, and then obviously Japanese yen as well as one of the larger ones as well. But that's obviously has been going sideways, but having quite a large pullback at the moment. And I think it's going to end up down at 88 again, like what it did in Trump's last presidency. This is when Trump started in 2017. And it sold all the way back off down to 88. So I wouldn't be surprised if they get it back down there because, it helps boost the economy and all that sort of stuff. But yeah, this is going sideways because both currencies, like you just said, are basically collapsing. And that's why the yield's having to go up because people are like, well, do I want to get paid back 5% in something that's going to deflate 100%?
Yeah. And that ties into gold, I guess, nicely next. And what are you seeing charting wise for gold?
I'm long gold from back here. So all of the crypto exchanges are Bybit and I think BingX as well. You can now trade gold on. So I've started trading gold because it's been obviously so nice to trade lately. But this is a really obvious setup. Came back down, tagged this previous high, order block. And then holding on to this level through here quite nicely as well. And we started pushing back above this key level. Let's put a long position here. Stop loss is just below there. I've already taken a chunk off that as well. It's a nice little trade, locked in some profit. And now, the trade's now, the entry's now at break even. Stop loss now is break even. So free trade from here. And I think it's probably just going to run back to here, to be honest. If you compare it, typically when stocks are having a bit of a sell-off and showing some weakness, which they're doing at the moment because we're at some really key levels like developing value area high and also value area high as well for S&P 500. But I was just expecting stocks to pull back. There's a whole heap of levels through here. We've got value area high from previous year. We've got the current VWAP through here as well. And the red line through here is the 200 daily moving average, which is a really important level for stocks. So I don't know if NASDAQ's going to make it all the way back down there, but if it does, the gold is probably going to come back up here and maybe even break through 3,500. Like you were saying, people are exiting bonds, which is why the yields are going so high and they're rotating into things like gold.
Well, other interesting thing you just mentioned is the crypto exchanges. I think it was Bybit has added a whole another range of the top, 50 or 100 stocks. So this whole, like we just spoke about, is maybe the demolition of the old system into the crypto system. It's interesting that more and more of these top crypto exchanges are now allowing you to do your gold, your stocks and whatever as well.
100%. And it's great for, people like us in other countries that aren't in America because you can trade them all against the US dollar, hold US dollars, and then you don't have to hold, some shitcoin like the AUD.
Yeah, and compared to in Australia, back in the day, if you were trying to buy an international stock, it'd cost you $50 per trade and stuff, whereas now it's just a click of a button from a phone app with basically 0.1% fees. It's changed so much. But what about Bitcoin? How excited are you? What are the sort of key levels you'd be worried about if it lost those?
Well, I mean, it's looked like it's wanted to turn around and have a sell-off. And obviously, we spiked the all-time high last night. When was that? 2:30 a.m., which is perfect time for us to be awake trading that. But it always seems to happen. But yeah, that would have been a great short setup. And take some off for a quick trade. And it's given a whole heap of those, but especially if you look on the 4 hour. Like here was a really good one, back a couple of like this one through here, this one through here, but it just seems to just push through it anyway. Even though it's giving like really good short setup entries, it's not rolling over, which is telling me that it's actually quite strong. Now we're finally breaking through the all-time high, and if we come down here on the lower time frames, we've come back and we've retested that all-time high, which is just this line through here is from the previous all-time high. We retested that and bounced off it. Now, we're also getting a rejection candle here again, which it loves to continuously do and then push in the next candle. So it's very difficult for bears right now because they keep on getting setups, nice rejection entries right at resistance, and then the bulls just push it higher and then take them out, which is what we saw here. So you would have had a whole heap of people would have put their stop loss above this level here, and then you come through, and that's why you get this spike like that, because that's people getting liquidated or stopped out.
What about like really big picture? Where can you see us running to now, like 130 or 150, straight to 180 over the next few months? I think we can get that high this year for sure.
So if we finally clear this level, and it might take a little bit, so we have to be aware that around all-time high it can get a bit nasty. So I wouldn't be surprised if we did get something like this, and it builds a bit of a base and then takes off. But I mean, every time I thought it's going to do that, it just continues to push higher. So I could be wrong with that. But yeah, the next level up from here is 137, and then 155. So I wouldn't be surprised if we end up, maybe chop around in here or something like that, or just break straight out. But anyway, we make our way up to 137 and then spend the rest of the summer in the US having a bit of a pullback, maybe put in a falling wedge or something like that. And then we start to put in some bullish structure, August, September, and then break out of that. And then we run to 155, 200K type thing. So yeah, those are the levels, but it does, if you look at previous cycle, it does like to hit these macro fib levels and then have a pullback. I'll just run across to the previous cycle and show you how accurate these macro fib levels are. So once we finally broke out, ran straight to the 272, which would basically be 137. Then it pulled back all the way to the 1.618, which would be 100K at Bitcoin currently.
Yeah.
Then once we bounced off that, it ran all the way to the 2.618 and pushed straight through that and ran to the 3.272, which, comparatively, if we did those kind of swings here, I'll just draw it on the screen so everyone can see what that would look like. We would run up to here, pull back to 100K, have a consolidation, chop around at 155 for a little bit, and then run all the way to 190. Pretty much in a straight move. And that could happen much faster than that, right? It could end up looking a little bit closer to something like this. Yeah. And October, November, be looking up at maybe 200K by October, November.
Interesting. That aligns with my kind of, gut feel. And as well as all Phillips data and indicators at the moment are saying it's time to be fully allocated and fully risk on. So that's fantastic.
100%. And we've got to remember as well, like they're pretty much finishing up QT at the moment. And so QE is not far off. And Goldman Sachs is saying that they expect QE to start in quarter four of this year, right? So, which means that, we could end up having a really big push in, usually the best setup usually comes in September, and then it makes a higher low in October and then pumps from there. But let's see how it goes. I usually expect sideways, June, July, August is usually sideways most of the time, but we might pump to the end of June, then sideways July, August, find a good bottom in September, higher low in October, then send for the rest of the year pretty much.
Fantastic. Well, guys, if you want to know all the coins I own and all our research, head over to nuggetsnews.com.au. Kyle's trading stuff, his courses, his group and all that, all the links down below, as always, to follow him on Twitter and that as well. So any final thoughts, mate?
I mean, it's definitely time to be risk on, like you said. And just hold on to your hats, because I think this thing's going a lot higher than what most people expect. And I think one thing we haven't talked about is the Bitcoin Strategic Reserve and what Howard Lutnick's doing, and how they've set up basically a competitor micro strategy. And they've got, I think it's May 22nd, they have another roundtable in the White House. So we could get some big news, maybe coming out about the Bitcoin Strategic Reserve. So everyone should watch out for that.
Awesome. Appreciate your time, mate, and we'll do this again soon.
Sounds good. See you guys.
Cheers, guys.